everybody. Hello, good evening. Let us start because I'm quite conscious of time. Good evening, everyone. Welcome to this evening's talk. This evening, we're talking about how to obtain mortgages overseas and why we assume it's difficult. And this evening, we will talk about how actually difficult is it. And we have Donald Klip from Global Mortgage Group and Robert, who is the CEO of American Mortgages. Hi, guys. Robert, I know you have a few slides, so if you just want to share it with us so that we can follow your introduction and your explanation, that would be great.
Sure, we'll do. That'll be Donald.
Oh, sorry, Donald, sorry. I also want to say a special hello to Melinda Murphy, who is from the American Association, who is also joining us today. Hi, Melinda.
Hello, hello. Welcome, everybody. It's lovely to see so many faces here, or so many black boxes.
So Melinda is our co-host this evening.
Is the screen up?
No.
No, not yet.
Oh.
Press again.
Okay.
2 years on Zoom and no, we still can't do it.
I need to,
right?
Yeah, hold on, I need to share the screen. Share screen. Got it. And
No.
No, not yet.
uh-oh.
Uh-oh.
Here we go.
All right, we're in.
So Donald, the floor is yours.
All right. Great. Well, thanks, Susan, for the kind introduction. Hi, everybody. Thanks for taking the time this evening and spending it with us. I know it's dinner and family time for many of you, and we're really grateful you've chosen to listen to us. My name is Donald Klip, one of the founders of Global Mortgage Group, and you'll meet my co-founder, Robert Chadwick, a little later in the presentation. Robert is the CEO of American Mortgages, our US subsidiary, and he's based in Singapore. In today's presentation, we'll discuss the problems facing non-residents when they try to get a mortgage in a country they don't live, for both overseas expats and foreign nationals. I'll discuss why this problem exists and some interesting aspects of the mortgage lending market that many do not know. We'll then jump into our offering, our process, and saving the absolute best for last, Robert and American Mortgages. Now, to set the stage for this evening's discussion, I'd like to illustrate a typical loan request that we get every day. Your daughter gets accepted to a university overseas, and you want to buy a home nearby, but you need a mortgage. You go to your bank in Singapore or Hong Kong, and you even try your luck with banks in the US. And after 3 months of trying, you give up and you pay for the home with cash. Foreign home buyers face this problem every day. In fact, last year, 500,000 homes worth $250 billion was purchased by foreigners globally. And because it's so difficult to get a mortgage, 80% is paid with cash. So why is this so difficult? Well, traditional banks were created to serve its own citizens. Singapore banks were created to serve Singapore citizens, and US banks were created to serve US citizens. For example, if you wanted to get a mortgage in the US, I'm sure you try your luck calling these banks. It's going to be difficult, but you may be able to get through. And if you're lucky enough to find a bank that could help you, they would require 40% down payment, 2 years of US credit score, 2 years of tax returns and income verification. You'd have to speak English and match their time zone. And this would take 3 to 6 months to complete. Now, could we be looking in the wrong place? Well, there are other mortgage lenders besides banks, and they're called wholesale lenders or mortgage lenders, and many do not know because they don't deal with retail. In fact, in the US, 70% of the mortgage market is by wholesale lenders and increasing, not Chase, not Wells Fargo, not Bank of America, wholesale lenders. I'll get into why this is important later. So our solution is Global Mortgage Group, an international mortgage specialist. We connect foreign borrowers with our network of lenders globally. We partner with these non-bank lenders to create loan programs specifically for overseas borrowers. And because we only work with overseas expats and foreign nationals, we have developed a loan process that specifically addresses the needs of our overseas borrowers. Using the US as an example, our subsidiary, American Mortgages, now offers loans to foreign borrowers with only 25% down payment. We accept foreign credit report. No tax returns or income verification is also available. We speak your language in your time zone, 24 hours a day, 7 days a week, and we can fund a loan in under 30 days. So back to the presentation and a little bit about us. So Global Mortgage Group is an international mortgage specialist. But understanding the global mortgage landscape is difficult, and we understand the local cultures of where our clients are based. We have over 300 lending relationships globally, and our core markets for residential real estate loans are US, UK, Canada, and Australia. The market for property destinations that are popular globally. We do Europe and other countries on a case-by-case basis, but those are really our core markets. Now, I wrote the core purpose here because it really guides everything we do. We're really here to create a social good. Our goal is to democratize this business, this non-resident mortgage business globally. Getting an overseas mortgage for investment purposes should not be so difficult. It should be made easier, cheaper, and more transparent for all. Now, here's a little, fun anecdote about Robert and myself. We actually met. It's not your typical expat story. A little bit about ourselves. I was an investment banker for a long time, and Robert was a wholesale lender in the US for an equal amount of time. And we actually met in CrossFit at 2017. I guess something about a near-death experience with these workouts that it really bonds people. We became friends, and I guess what really drives us is that we're family guys first, and I think those values connect us in our decision making and our ability to work as partners. We're both American, we were discussing how getting financing to buy a home is really difficult. And in Asia, the entry point and return potential is less attractive than the US. So why not make this more available? So in 2018, we started offering one loan program with one of the largest wholesale lenders in the US to Asia. And after successfully funding a dozen loans in 6 months, we said, wait, this is no longer a hobby. This is an opportunity to fix a real problem. So we took part in an accelerator program with Spark Labs in Korea, and we're lucky to have secured investments from 2 international banks and some well-known VCs who believed in our vision, and they're our shareholders. Also, because of our ambition to own our own bank, which should be finalized this year, we spun off our US business to American Mortgages, which Robert is running. So fast forward to 2022, we now have 20 talent across the globe and probably 50 by mid-year. So definitely much more than a hobby right now. Here, we're generally fairly low key, but the reason why I highlighted this is in a short period of time, we've been recognized because we've fulfilled a gap in the market and we're being recognized by that. So here's where I describe a little bit about the market. So here's the problem. So traditional banks, we all know who they are. Overseas borrowers is a very small portion of their business, 2%. So it's too small for them to really make this a core business. For us, it's 100% of what we do. It's all we do. Okay, so we understand, we have spent time understanding the cultural differences for each market, and they're definitely different. We understand how to get an embassy appointment, where the lawyers are in all of the major markets that we work in. Information gap. So this goes back to what I talked about wholesale lending. Because they're wholesale, they don't speak to retail. They package these type of loans and they off-sell them through brokers or even banks. And there's no way for somebody, for example, in Asia to find these banks. We've done the hard work for you, right? So this This mortgage market accounts for 70% of the market. It's big. And we've over the last 4 years connected with 150 US lenders. And so we know which lender is right per requirement of our borrowers. Traditional banks, they focus on their own citizens and only their own product. Our mortgages are client focused. We find the right product for your requirement. And it could be a bank, it could be a wholesale lender. And we figured that out, all of that out for you. Okay, and here's a little more information on wholesale lending. So 2020, there's $4.4 trillion worth of mortgage originations, of which wholesale lending was 2.6. So that's 60% of total, and that's more this year. What's really interesting is that it almost doubled from 2019. And the reason why this is important is because banks everywhere in the world, Singapore, Australia, the UK, the US, they're getting more restrictive on how they lend. Meanwhile, borrowers are moving away from what a bank wants to lend to. A bank wants 12 months pay stubs, a letter from your HR department, consistent salaries, those type of things. And the world is becoming more entrepreneurial. And, especially in the US where they don't know how to recognize, overseas income, as well as banks elsewhere in the world. And I think this is only going to get more prevalent. And we're the only ones globally that have made an effort to see this coming and connect with these type of lenders globally. So as mentioned, we're an international residential mortgage specialist. These are our core markets. We do, on a case-by-case basis, some of Europe. So here's a snapshot of the UK. It's really not fair to get too detailed about, the loan parameters because every borrower is different, every lender is different. People are, have trusts, they have offshore income, some have no income. But generally, depending on a few variables, this is what it looks like. Now, I want to mention one thing here, and I think Robert will mention this as well. There's been a recent trend of bridge lending. Now, because markets are so hot that if you see a property and you cannot secure financing, I'm not saying this is in all states and all markets, but in certain pockets in countries, things are fairly hot. And if you're an overseas borrower, even 30 days or 45 days may not be fast enough. We use a bridge loan to quickly purchase the property. This is purely asset-based. We don't look at financials. And then we take 30, 40 days to refinance into a traditional loan. And that's really popular in the UK and in Australia in particular. Here's Canadian mortgages. Now, this is fairly unique. I think there are places you can, find UK or Australia mortgages. Canada and the US especially, we're the only ones. It's a highly regulated, market, and we have Canadian specialists in Asia that just focus on this. The markets aren't as hot as the UK and Australia, but there's a lot of interest, especially in, Vancouver, Toronto, and Whistler. Australia, obviously very, very hot at the moment, similar to the UK. And this is what it generally looks like, what a mortgage looks like. We have Australian specialists on our team, and bridge loans are very popular as well at the moment. In the UK, I would say the traditional banking market is even tighter than, say, the UK. It's just really difficult to get a mortgage in Australia. And they're very worried about overheating the market. So it's difficult to find, lending options. Here's sort of our standard process. While it may look straightforward, we've really fine-tuned this process specifically for overseas borrowers. We have a consultation with the client. We understand their requirements. Then we go through a research phase of finding the right loan options per borrower. Then we present those options to the client. We discuss the pros and cons, and once they decide to proceed, We take them through the application process with the designated lender. We walk them through the pre-approval stage or approval stage, and then we help them clear conditions. And then it's signing and funding. Funding tends to be at a law firm, licensed law firm of that country or an embassy. Now, saving the absolute best for last, I'd like to introduce you to Robert Chadwick, my business partner and CEO of America Mortgages.
Thank you, Donald, and thanks everybody for taking your time out of your evening to spend with us. I'll go over what is required for a U.S. mortgage as a foreign national and expat, and just cover the basics of our company, America Mortgages. So I think what makes us unique is our only focus as a company is foreign nationals and expats. 100% of our clients are living somewhere abroad. As Donald mentioned, Global Mortgage Group is the parent company of America Mortgage. We spun off America Mortgages to be very specific for the US market. We have our US office, which is based in San Antonio, Texas. We have an Asian headquarters where we started out at, which is in Singapore. And we have loan officers that are spread out all over Asia, Europe, and the Middle East. And I think what makes us, again, very unique, all of our loan officers are either from investment banking, private banking, or mortgage banking. But more importantly, they're all expats. So, they understand exactly the situation of, earning your income abroad, living abroad, et cetera. And I think it makes the journey, the customer journey, much more easy to process. We have 150 direct lending relationships with banks and non-bank lenders. What makes this very unique as well, all of these banks are very, very familiar with the type of clients that we have. Foreign earned income, no US credit, et cetera. All of the issues that you would have dealing with a regular US bank, you certainly will not have. And as Donald has mentioned, we are in the process of getting our own wholesale banking license, which we hope will be either Q1 or Q2 of this year, which will allow us to lend our own money and create even more loan programs that are very specific for this. I would say all these things are very unique, but one of the real bonuses, we have no restrictions on states. Our focus when Donald and I were talking about starting this business was to be able to offer lending regardless of where the borrower or the client wants to buy the property. So we have loan programs in all 50 states. Next slide. So I'll cover a couple real life examples of what we've done and what the problems were with the client. So a typical client for us, or about 30% of our business, is US expats. In this particular case, and we see this more and more often, it was a client that lived in Hong Kong for many years. And because they lived in Hong Kong for many years, they just no longer had US credit. There was no need for it. And they had no score or no credit profile. They wanted to purchase a home in California as an investment, but with the intention of eventually retiring there. What made it even more challenging was the borrower was self-employed and declared very little income. So if you were to look at his tax returns, it would be very challenging to qualify going to a standard bank. And he also, all of his income was earned overseas. So one of I guess the things that we're most proud of, all of our underwriting is common sense underwriting. So due to the borrower's lack of US credit, we didn't decline their loan, we didn't turn them away. All we did was we looked at them as a foreign national, because most foreign nationals are not going to have US credit. So even though the accessibility of the loan to value, so for a US citizen, they can normally get up to 80%. financing, but for an expat, they can get to 75. We were able to get him at 75% financing, get him underwritten as a foreign national, even though he was a US citizen. But what makes a US citizen that has no credit profile be able to get these loans is they start reestablishing the US credit. So at some point, he's going to be able to come back to us and he's going to be able to refinance into a proper expat loan. Next slide. Excuse me. So non-US citizens or foreign nationals make up about 70% of our business. In this particular case, it was a UK citizen living in Singapore, wanted to buy a house with a swimming pool in Florida for yield and capital appreciation. Excuse me. As most foreign nationals, they had no US credit profile. And this particular client was behind on filing his local tax returns. So not only did he have no US credit, but he didn't have tax returns. So he had applied for a loan with an international bank, went all the way through the process, provided all of his documents. And most of these banks will actually, because they're so busy, are going to collect all the documents, all the title, they're going to order the appraisal. All of this is going to take 20 days or so. By the time it actually goes into underwriting, then the loan gets declined for this particular reason because he had foreign earned income. The borrower was already into the transaction. So he was about 10 days before he was supposed to close the transaction, had an accepted offer on a property and was concerned about losing his deposit. So we structured a loan using his Singapore credit. We were able to get him a 30-year fix. We did not use his tax returns. He wasn't up to date. So because we do loans from Shanghai to Sydney, we tried to make it very, very uniform for the client. It also makes it much easier for the underwriting. Rather than asking for tax returns or pay stubs or NOAs, if they're employed, we want a letter from their employer. If they're self-employed, we want a letter from their accountant. This letter just needs to state the last 2 years' income in the current year to date. So it's a very simplified process, very, very effective, and very easy to get through the transaction quickly because of this. And in this particular case, we closed the transaction in 22 days. The client opened up the application in Singapore and signed at the US Embassy without ever leaving Singapore. Next slide. So these are our most popular loan programs. All of our loan programs are designed for our clients, which are all living overseas. So our most popular is the American Mortgages Expat Plus. That is for US expats. Our goal with that loan program is to try to make it as if you had walked into a local bank and applied for a mortgage. Same requirements that would be required for a standard loan are required. 2 years US tax returns, pay stubs, bank statements, etc. But we do not require the borrower to have a W-2. Earning foreign earned income is perfectly fine. Whether they have US credit or they don't have US credit, there's always exceptions. The most popular loan for foreign nationals is what I had discussed in the previous slide. Does not require tax returns, does not require pay stubs. It's only going to require a letter from your accountant or your employer. You can get up to 75% financing on a purchase and up to 70% on a refinance or a cash out. What makes us also unique on these cash out programs, we have no limit on the amount of cash out. So depending on how much equity you have, as long as it meets the criteria of the loan to value, you can really pull out as much cash as you need. One of, I think, probably the most unique programs and the most used program currently is called our American Mortgages Dscr. This is where I was talking about the common sense underwriting. These loans qualify only on the rental income of the property, meaning that we're not going to ask you for any personal income. So if you're self-employed, maybe you have lumpy income, you declare less than you actually have to make or in serviceability, these loans are perfect because when we order the appraisal, or if the property already currently has a renter, we will use that as the qualifying standard. It's normally 1-for-1. As an example, if you're getting $2,000 a month in rent and your mortgage payment is $2,000 a month, they wash, it qualifies. For more of the high net worth borrowers, they tend to have very, very complicated tax returns. A lot of operating businesses, a lot of investments, et cetera. Going through these tax returns and providing all of these to the bank is an administrative nightmare. We have a program to where all they're going to require for income is to provide their stock portfolio. 2 months of their stock portfolio, 0 encumbrances. There is not going to be any charge on the stock portfolio at all. All we are using is the stock portfolio to qualify for the loan. We will take the 2 months average of the portfolio. We will divide it by the fixed period of the loan. So for example, say the fixed period is 5 years, but amortized over 30. We'll divide that portfolio by 60 months, and that would be the qualifying income for the property. The day after the loan closes, you can sell your assets, you can liquidate the portfolio, whatever you need to do, 0 encumbrances on it. Donald had mentioned this earlier. This is kind of a global thing right now. Bridge loans. So bridge loans are purely asset-based. We are doing a lot of these, whether it's all over the world, Singapore, US, UK, Australia, etc. Hot markets, people are using it to buy same as cash. So, we can get up to 75 or 70% financing, sometimes 75, depending on where it's at, across all 50 states. There's normally no prepayment penalty on these. The rates are obviously a little bit higher because it's only on assets, but we can close the transaction a week to 10 days. You close it as same as cash, and then we come in right after and we refinance it out into a proper mortgage. And another way people are using it is, we're seeing a lot of people with operating businesses that are having COVID issues, short cash, whatever it may be. You can use your property to be able to pull a pure asset-based loan out of the property without having to worry about your current financial situation. So one way or the other, a bridge loan is a fantastic option. American Mortgages Super Jumbo Plus. We do probably not a lot, but 2 or 3 of these a month. These are loans that are over $10 million. On average, you're able to get up to 60% loan to value, and you're able to use any of the qualifying options that I discussed on the above loan programs. The AM Portfolio Plus. So this is a loan against multiple properties, and you would actually be surprised. There are a lot of people that own a lot of property, massive portfolios. Just as an example, we have a client in Hong Kong that owns 400 units in Atlanta. So the minimum loan amount for these per property is $50,000 US. You have to have at least 5 properties, but there also is a minimum. It has to be at least $1 million in total properties. But what makes these loans really great is once you're over 2 million in assets, so 2 million in property values, it's no longer about, is this borrower a US citizen? Is he a foreign national? What's his personal situation? It's all about cash flow of the property. So as long as the property's cash flow, that's how you qualify. Rate-wise, you're identical to a guy that's living in Atlanta to a guy that's living in Singapore. So it's a super great loan. And it also, if you own 400 properties and you have to write 400 checks a month, that's a lot. This is 1 check, 1 loan. So next slide. So again, I think what makes us unique, all of our loan programs are tailored to fit our clients, which 100% are living abroad. And no US credit is required. Foreign income is allowed. Simplified income documents, which you won't see anywhere else. You can qualify only on the subject rental income, which we had talked about before. Foreign bank accounts. So if you're holding your money in Singapore, Hong Kong, London, wherever it may be, you can use those funds to fund the transaction without having to have it go through a US bank. Again, something super unique, something a lot of our clients had asked about, and we were able to get these programs worked out. There is no requirement for most of our programs to open a US bank account. So if you don't want any additional US exposure, these are really good programs to have. Our lending is direct programs. So as Donald mentioned, most of the lenders that we deal with are wholesale lenders. So they're not dealing with the retail public. They're only dealing with the brokers or other banks. For US citizens, identical as you would get in the US, up to 80% financing, whether it's investment properties or second homes. Foreign national, not much of a difference, 75% leverage on that. No limit on equity releases. And I think you'll really appreciate this if you do a transaction with us. Again, all of our loan officers, they're around the world. They are expats. They are all super experienced. They're working in your time zone and they're working for you. Next slide. We're just kind of highlighting this because this is the most common question when we get a client on a call. Client gets on the call, first thing they say is, oh, I don't have any US credit. That's not a problem with us. You can use your credit in Singapore, credit in UK, credit in Australia, wherever it may be. In the event you're from a country, say UAE, that doesn't have a credit reporting agency, that's okay too. We can use alternative forms of credit, such as insurance payments, credit card locally, car payment, etc., in lieu of actually having a report. Next slide. So over on a weekly basis, we send out a newsletter. And if you want to subscribe, you just go to our website and it's at the bottom and you can put the information in. You're not going to be bombarded with emails. It's very targeted stuff, whether it's, Global Mortgage Group on international mortgages or American mortgages, very specific on qualifying for an American loan. But we did a deep dive series and Donald was really heading the charge on this. And it's a really good thing to look at. We are comparing the best US cities comparison to international investment points like London, Sydney, etc. And you can really get an idea of what the yields are, what the rent possibly could be, the issues with taxes, etc. So you can download it either on our website or you can, zap the QR code here. Okay, next slide. So thank you very much, on behalf of myself and Donald for your time. We're going to open this up to some Q&A, and I think we'll pass it back over to Susan.
Yes, thank you. Yes, so we stopped sharing now. So let's go on to the questions. So Melinda, if you can read out, yes. So Melinda, if you can read out the questions that you have, and I'll read out mine. So then we can sort of tag team that way. Okay, so let me start. Guys, can you give us a little checklist on the things that we need to have ready before we actually knock on your door and engage on your services? Obviously, we need to find a property, right, that we want to buy.
Sure. So, so we have an entire customer service team. When you are ready to apply for a mortgage, and there's no cost to apply for the mortgage, you will receive, if you're a foreign national or an expat, a very specific list of documents that you provide. If you're a US citizen, it's identical to what you would provide if you were to apply for a loan living in the US. 2 years tax returns, bank statements, pay stubs, etc. If you're a foreign national, it's passport, income letter, 2 months bank statements, and the credit report from your home country. Very simplified.
Great.
It does
So
sound very simple.
it
It
does
is
sound
simple.
simple,
It
doesn't
really
it? Sounds
is.
pretty easy. Sounds a little too easy.
Yeah.
How do your interest rates compare to traditional interest rates from banks?
So, obviously rates in Asia and Europe are ridiculously low. US rates, even at the best, were, in the high twos. Now they're hovering in the threes, and we do expect rates to go up, as obviously what everybody's seeing with inflation, et cetera. Our rates, if you were to look at as a US expat, is identical. It's identical if you were to walk into Bank of America and working, in Texas or wherever it may be, and having all of your documents. So for US citizens, you won't see a difference. Second home properties are very close to what owner-occupied properties are rate-wise. So if you don't intend to rent the property, you want to have a property as like a vacation home, then you're going to be looking at exceptional rates. I would say right now they're in the threes. These are 30-year fixes. And 30-year fixes regardless of the borrower's age, which, if you live in pretty much anywhere except for the US, mortgage loans are restricted to either the borrower's working age or the borrower's actual age. In the US, you can't discriminate against anything, including age. So whether you're 19 or 99, you still qualify for a 30-year mortgage. And that's both for US citizens and expats. Now for expats, our rates they're fantastic. They are probably, depending on the loan to value, maybe about a 0.5% higher. But if you look at all of the requirements that they don't have to provide, such as US credit, et cetera, there's definitely, I think, an advantage to it. So.
Thank you.
Thank you. Next question. Is now a good time to invest in US properties? Like, how has the COVID affected the house prices in the US?
I can take this one. So, perversely, I think we all see it, right? Like, the global economy basically shut down for a year and then everything's record high prices. So there's a little bit of, it's kind of gone against common sense. And I think there's a few things. Like in the US, it's a trifecta of one, there just hasn't been enough supply. Millennials weren't buying homes, and the big developers got caught off guard. Number two, people are upgrading. I mean, that's even in Singapore, everywhere in the world, people are upgrading and people are gentrifying. So it hasn't affected house prices. I would say, and it's up for debate, that it's pretty clear interest rates are going up, or at least that's what people expect, and that's what yields are pricing in. Does that slow the marginal home buying? I'm not sure. I mean, it hasn't yet. I think it'll slow down a little bit, but I don't think you'll feel the slowdown because it was so high to begin with. Yeah. I think the yields, in the deep dive, the yields, part of what Robert and I do is we're trying to be, we're on this journey to we're bringing education about the US property market outside the US, because unless you have gone to school there, or maybe you're a professional that had some exposure in the US, it seems like a black hole. And in fact, as a pure investment proposition, it is the best versus almost anywhere. So yeah, we're still very confident.
Alice asked, after the loan settles, do we deal direct with the lender, or are you still the point of contact?
You will deal directly with the lender. We're only acting as the intermediary. Once the transaction closes, you will pay the whichever lender had lent the money on the property.
Okay. What are the states where you foresee the most growth in property prices in the next 10 years? And also, do you think it's always wise to invest in university towns for parents out there like Melinda?
Yeah. Let me take this one, Robert.
Yeah, sure.
Yeah. So, 10 years, it's hard to say. If I had to take a guess, Texas looks really good right now. I think it ticks a lot of boxes. Obviously, no state is perfect, but I think what you'll see is, 10 years is quite far away, but I think what you'll see is the US does this better than most countries, is that places, it's easy to gentrify. It's easy to pick up your bag if you were a teacher in California and you want to be an Uber driver in Texas, or you were, it's just easy. But what'll happen is that it'll overheat just like anything, and then it'll gentrify elsewhere. And it could be, if I had to guess, maybe Oregon, that's very popular. Arizona is very popular. But, right now it's Texas and Florida, for obviously the obvious reasons. Texas has low taxes in the state. A lot of corporations are moving in. And the one thing that drives property prices is job opportunities. And so you want to be where there's more jobs. And right now that's Texas.
On the back of that, before I get to Alice's question, on the back of that, cities like Manhattan and Boston, they saw a lot of people leave the cities during COVID. And so there's lots of empty properties within these major cities. Do you think those are good buys now? Will the cities come back?
Yes. Yeah, go.
No, sorry. It's funny because we do a lot of loans in Manhattan, and with people leaving, there was a decrease in property values because there were people trying to refinance, and we weren't getting the values on the appraisals that we were hoping for. Actually, we're kind of seeing the opposite of that now. I think people fled, the fear of COVID or what was going to happen, and now things sort of have settled down in the U.S. and people are going back. So we're seeing property prices actually going up again.
Susan, you want to take the next question?
Yes, Alice asked, is the interest rate typically the same as a citizen of that country, or if not typically, how much is it in the rate loaded?
So yeah, I discussed this a little bit earlier. So if it's a US citizen, it's identical. If it's a foreign national, obviously there's a little bit more of a risk, and the LTV is slightly restricted, but the rates are not that far off. Right now, a US expat, if you're buying an investment property, you're looking at rates in the high threes. If you're a foreign national and you're buying an investment property, depending on the loan to value, your rate is going to be in the low fours. So not a huge difference, about a 0.5% difference.
It's now a good time to buy. So every morning I wake up and I, open my iPad to read the news and go, oh, because the markets are just tumbling. Is now a good time to buy real estate?
So,
there's some markets, like anything, like any investment, or you're buying a stock, unless you're buying Apple, which never goes down, you try to look for something that has value. Now, would I be buying, if it was me, would I be buying Austin? Maybe not. It's really, really hot. Would I be buying some parts of LA? Maybe not. But would I buy, and I don't want to give away the secret sauce, but there's a city in Texas that really ticks a lot of boxes. We all know what it is, but it doesn't get the fame as the other cities. The thing about property is that an investment, it kind of, people get confused with, there's more emotion to it because maybe you went to school there, or somebody there, or whatever reason, maybe you were posted there after college. The thing is, when you approach an investment, it should be rational. Like, it should be, how much can you afford? What's the potential upside, tax adjusted, entry point, all those type of things, just like you do for a stock. So there are places, and it doesn't have to be, in Orlando. It could be close to Orlando. So yes, short answer is yes, because the demand is there. When we really feel like, people are looking for whatever reason to, move to the US.
Okay. I read that interest rates are going up 8 times. Actually, I read that 8 times. I don't know if that's fake news.
That they're
fake
going
news
up
or
8
not.
times, or you read it 8 times?
No, that they're going up 8 times. I don't know if that's fake news or not. It's probably fake news. But what are your thoughts about that? And does that affect the buying chances of people? And would it be a better idea if people lock in their mortgage rate percentage?
Yeah. So I can answer part of this. So the 10-year bond yields are actually priced in 3 rate hikes already. Now we can argue how many more. I think everybody knows that people are worried about inflation. But one thing I've learned is that policymakers are worried about the wealth effect. If stocks start falling, people get worried, they start selling. Baby boomers start selling, cashing in the 401ks and all that kind of stuff. It causes a ripple effect that I'm not sure, any government has the stomach for. But just because rates rise doesn't mean people stop buying. What happens is when rates rise, the incremental buyer that can't afford that loan has to rent. So what happens when rate rises, yield rises. In the 80s, interest rates were in the 15s, but property prices were going up. So really, I'm still and we're all pretty confident that there's always going to be demand. But yeah, it seems like rates are going up, and various parts of the investment world are reflecting that concern.
So hats off to you guys. You found a hole in the market, and I think it's a place that we're all very thankful that you found. But you're a new company, and when just when you listen to what you're saying, they sound like a little bit like risky loans on your part because you're not quite doing the same due diligence that maybe a traditional bank does. That's kind of how it feels. Maybe that's not true, but it makes makes me question whether or not you'll be here in 10 years if I'm taking out loans with you. Can you talk to?
That's it's a super good question, and a question we get often. If you look at where our loan to values are structured, the maximum for US citizen is 80%. The maximum for a foreign national is 75%. Now, it really shouldn't matter where the borrower is located. If I wanted to buy a property in LA and I'm living in New York, there's that distance there, right? I'm not able to go visit and access or whatever. There shouldn't be any difference if a client is living in Singapore and if you're buying a property in California. And that's how we look at the overall picture. So certainly we've been able to have some loan programs that are common sense. Just because the banks require all these stringent paperwork, it doesn't mean it's right. I mean, it's actually old school. And the way all the mortgage lenders, at least the ones that are at the forefront, are actually looking at this more like as we're looking at it. And that's why you're seeing these loan programs that are based on common sense underwriting and not just, I need 100 pieces of paperwork to check off all the boxes.
I can add to that a little bit. I think we definitely don't want to give the impression that we're doing something differently. We do everything. It would be market practice in the US. One of the things that we're doing is that we're actually in your time zone. We've brought it outside the US. So that's one. So we don't do anything differently. Now, what I would say is what makes us a little bit different is that if you went to a loan officer, say in California or Texas or wherever, that loan officer is asking you things as they would a US citizen, which is with social security number and all those type of things. And if you don't have it, they don't understand how to work around it. What we do is we go to the CEOs of these lenders, right? And again, they account for 70% of the market. So they're actually selling those loans through banks. So you could likely be using a wholesale lending line through a bank. But because we go at the C-level relationships and we say, we're going to bring this type of borrower to your business, and let's look through your underwriting criteria and let's say what makes sense and what doesn't, like Robert said, common sense. And so it's not that, we're doing anything risky. We're just making something that doesn't make sense easier. Now, it's also why, like primary residence, and if you're a US citizen, those are basically regulated Fannie Mae loans, and it's just getting tighter and tighter. So at the end of the day, a mortgage is basically, some bricks on the ground, there's a value on it, and how much do you make, and can you afford to pay the mortgage? So it's something that we're trying to disrupt, like anything, and make it easier for our consumers. So yes, we are actually trying to make this easier. Now, I think there's some things that happened in the past that when people sounds like it's too easy, they might refer back to it, but it's very, very different. Very different.
One question for me. Would you suggest your clients to take up mortgage insurance just in case?
For U.S. properties, if you compare it to the U.K., where you have to take out life insurance on the property in case you were to pass away, that life insurance would pay the mortgage. The U.S. is not required. The only insurance that is required on a property is hazard insurance, which it names the lender as the beneficiary, and it would cover the replacement costs if the property burnt down, flooded, whatever it may be. So insurance is not required, but it's always an option if somebody chooses to. So
we actually have a lot more questions. So Chris wants to know, is the AM asset depletion only based on US stock portfolios?
Very good question. We get that a lot as well. As long as the bank that you have your portfolio in has a US office, then that's fine. If it's a bank that is very obscure and maybe in China or wherever it is, and there's no US presence, then we cannot use that stock portfolio. But if it's a Bank of Singapore stock portfolio, say for example, and there's a Bank of Singapore in New York, it would be accepted.
So Chris's follow-up question to that was, AM portfolio, is it based on single family homes or multi-family homes too?
Up to 1 to 4 units for that particular program. But if somebody wanted to buy, say, an apartment complex, or 4 units up to really there's no number, we have loan programs for those as well.
Another question is, if I buy a property in the US, am I then, do I get straight into getting a green card? Can I live there then?
I don't think there's any golden visa US programs, unfortunately. No, that's not the case, no.
Oh,
Alice
no.
would like to know, Alice would like to know, do you do loan pre-approvals?
We do, and actually we recommend everybody to get a pre-approval. There's 2 reasons. One is you want to make sure that what the loan that you're going to get is the loan that you want before you actually put an offer in on a property. And 2, the markets in the US are very competitive. So if you are not already pre-approved and you see a property that you really want, if you don't have that letter to provide with your offer, it's not going to be taken seriously. And it takes, once we get all of your document, it takes us about 72 hours to put it through underwriting and to be able to issue the pre-approval. So it's fairly quick, but the market also moves quick. So it's best to do it in advance and then start shopping.
That's quick. I've gone through this before. That's quick.
Yeah.
Yeah.
Linda, you want to take the other one, the next one?
Sure. Chris again wants to know, do your loans follow the US standard of 15-year or 30-year fixed rate loans?
So regardless of age, in the US, a borrower can qualify for a 30-year mortgage. If they choose to have a shorter tenure, that's entirely up to them. We have loan programs that are fixed at 5 years, 10 years, 15 years, and 30 years. What also makes us unique, which banks do not offer, we have an interest-only program, and this actually may go back to the question about how easy these programs are. So we have a interest-only program where they're only servicing the interest portion for a fixed period of time. And the most popular program for this is it's a 10-year interest only. So the loan is fixed for 10 years. So I'm just going to throw out a rate, say like 3.99%, fixed 10 years, interest servicing only. After that 10-year period, that loan converts into a principal and interest loan without any adjustment in rate, and it goes for another 30 years. So you have a total 40-year tenure. For an investor loan, that is absolutely fantastic. You're not going to find anything in a bank that would be able to offer that as well. A standard bank.
The chart says, hasn't the prices gone up quite a bit in Texas already? And I'd like to add, what town are you talking about? I'm from Texas. I don't know what little town you're talking about.
Yeah. Well, Austin's gone up. Austin's gone up, 36% last year. That's like, I said that about Apple 2 years ago. And, listen, these prices have gone up. It's really a crystal ball whether they come back or not, but there's just so much demand and there's just so much liquidity that people have made so much money in other areas of the market that you're kind of seeing this a little bit right now. Like it's it's just rational behavior. If you have a bunch of investment assets, whether it's stocks, some bonds, some private equity, and you think that the market is, a little shaky, what do? You sell your winners first. And what do you do with that money? Well, you're not going to stick it in the bank. So why don't I buy some property? Because properties don't come off 20% in the day. And because there's just so much demand at the moment that, it's very supportive. Is there down? Is it high? Yeah. It's, would I buy some of those markets? Maybe not. But like I said, there are some interesting pockets, but everything's gone up. There's not one investable asset that hasn't gone up a lot over the past 2 years.
Amanda says Boston rental prices have risen sharply,
Yeah.
and shortage over there now.
So, I kind of mentioned this earlier, and we were big pushers of this theme, early on, is that people, there was a general the days where you, actually, I said this, but, the days where you buy property and it goes up a lot, those are going to be, you don't own property like you own a stock. Like, it's just the wrong approach to it. However, what happens is, and I mentioned this earlier, and this happened in the 80s as well, is that as interest rates rise, it just starts to squeeze out the marginal buyer of property. There still is a lot, but the ones that shouldn't be buying anyway, but they're forced to rent. People have to live. So what happens is rents will go up. And I think that's the trade. The trade is you own property for yield over the next 10 years. It's not like the last 10 years where, you buy something and it doubles in, a few years. The next few years is, an income, an income type investment.
One last question. Any cost involved with pre-approval loans on your side?
There is not. So we have no application fee. There is no, there's no cost out of pocket to get approved for the loan. And, as I was mentioning earlier, it's fairly quick. Once you submit all of your documentation, we can normally get you an approval in 72 hours.
I do have a question that's come in. I was instructed to ask. So Robert, this is for you. It's from Claudia. My family, my husband and my two teenagers and myself might be moving to Tampa, Florida in the summer, great city. Do you have overall thoughts on where the real estate market is heading, short and medium term in Tampa? Also, do you consider the home price to rent ratio to be a good parameter to help us decide on whether to buy or rent a home? Based on this premise, if the price to rent ratio is 15 or less, it's probably better to buy. And if it's 21 or more, it's likely better to rent. What about if the ratio falls in the middle, say 18? Thanks so much for your advice, Claudia.
Wow, that's a very detailed question. I think, Claudia, if you want to give us a call, we can kind of go over what the monthly payments would be on a property, depending on what you're looking for in the loan to value. Florida itself it's a fantastic market. Living there is going to be a bit different, but if you're looking to buy a property for rental yield, Florida is one of the hottest markets. So.
Okay.
We had another question come in on the rental yield. What kind of ROI can we expect? Return on investment.
Well, I can say that, there's a lot of outliers, and we see this because we see the applications and we see the rental. I think, in some cities in Texas, you're looking at, high singles. And I don't think that's going down, to be honest. I think it's going to continue to go up. So yeah, that's, in the hot markets, there's trophy markets like New York, where it's just cool to be there, like San Francisco. They don't return as much, but that's not why people tend to buy them. There's obviously LA behaves very differently, and there's pockets that do really well sometimes and sometimes not. But Florida, Texas, Oregon, Arizona, Washington, where there's a lot of demand and a lot of companies moving there to build factories and hiring people. those are where you're seeing a lot of demand. So yeah, I mean, the rental yield in some of these cities are, you know, high single digits. It's in the deep dive report.
Yeah, it also, I mean, what makes the US unique too is it's a low barrier to entry.
Yeah.
I mean, you can go into the US and buy a property for $250,000 and you can start building a portfolio, as opposed to, you know, maybe if there's, I don't know if there's a lot of people on here where if they're Singaporeans or from Hong Kong, wherever they may be, their parents have made a lot of money on real estate because property values were, you know, fairly inexpensive. There wasn't this global trend of people moving, and, you know, with the Chinese, we're bringing the prices up in a lot of major cities. In the US, there's still value for money. I mean, you can get a house with a swimming pool in Florida for, you know, $300,000.
Deep dive report.
Deep dive report. Yes, exactly. Right.
Wow, that is amazing. That's like a car here. That's crazy.
Yeah, certainly. That's a Toyota.
I'm not sure what kind of cars you're driving.
I only drive a Kia. Right. So I think that's it for the questions, interesting questions this evening, guys. Thank you so much. Robert, any last words just to conclude?
Yeah, sure. So if anybody is interested in exploring this further, feel free to email us directly. There's, I believe, Susan will post our emails, or, you know, you can WhatsApp us. We're always available. You know, just give us a ring. We're happy to help out.
Donald?
Yeah, listen, I mean, this is prime time for a lot of families. So one, you know, thank you everybody for taking the time out. I know they're probably putting kids to bed, or, you know, whatever it is, or, you know, interrupting their wine hour. But listen, like Robert said, you know, we're actually here for a purpose. We're trying to make something that has historically been difficult and making it easier. It's, you know, it's almost like a tech company who's trying to disrupt something that's clunky. And that's our goal. You know, we're just trying to make it easier for somebody to buy a home overseas for investment, you know, easier and more transparent for everybody.
With that, I say thank you to everybody for joining us this evening. Melinda, thank you so much for being my co-host this evening.
Yes, thank you.
Absolutely. Thank you all. Wonderful questions you guys all submitted too. Great. Thank you so much.
Yeah. And as Robert said, I will include in my thank you email their email addresses and contact numbers, and also how to access the ebook, which they have created. So thank you so much, guys. I'm sure you'll get much more questions on your inboxes very soon. Thank you for having us and letting Expat Living have a little peek in your business in Singapore and around the world. So I wish you lots of success in the future. Thank you so much, and good night.
Thank you. Good night, everyone.
Thank you.
Thank you.
Bye.
Bye.